Welcome back to Cheddar's Opening Bell, everyone. Chinese regulators shocking potential investors on Tuesday after suspending Ant Group's $34 billion IPO, the biggest planned offering in history. And for more on this, we're joined by Howard Yu, professor at IMD Business School in Switzerland and author of Leap: How to Thrive in a World Where Everything Can Be Copied. Howard, it's good to see you today. Founder Jack Ma has been summoned by these regulators pushing back this IPO. What do they want to know?
Well, there are two ways of interpreting the current situation. One way is, Jack Ma, the controlling owners of Ant Group, he went out in Shanghai about a month ago and complaining the Chinese regulator applying the wrong policy to regulate Chinese fintech. Now, that doesn't wash well with your stakeholders. But fundamentally, we could look at where is the direction going. So possibly it's going to end up with a restructuring of Ant Group. Because right now is a financial supermarket. They provide payment system, which is Alipay, the heart of the system. Then they branch out into wealth management, insurance, but also consumer lending. What the Chinese regulator potentially are not happy about is the country are really allowing one single player to providing all these products and services, and that could incur too big of a risk for the country. So maybe we would end up seeing Ant Group as being broken down into different parts.
Talk to us about the relation to Alibaba. Alibaba's stock underperforming today. Jack Ma, the founder of Ant Group, but also the former leader and founder of Alibaba. How intertwined are both of these companies?
Well, look, the magic of Ant Group is really around Alipay. Alipay essentially is the payment system that have powered the growth of Alibaba historically. Because at the time when the Chinese e-commerce begins to take off, people are not very confident of transacting online. So Alipay becomes the payment system with trust that people pay to Alipay first, do not release the payment to the merchant. And that really facilitates the taking off of e-commerce. From then on, it becomes huge. All of this, of course, is the brainchild of Jack Ma. He is the founding entrepreneur that pushed for innovation, going beyond industry boundary. That's the success story. And he has been stepping down from running Alibaba about almost 12 months ago. And so this comes into a very critical moment because there's the leadership transition at Alibaba. At the same time, Ant Group supposedly to be one of the biggest IPO in world's history, now under huge scrutiny. I would suspect maybe the valuation could not achieve what they had been planned before.
What's the relationship, what's the backstory, Howard, of the relationship between China, Chinese regulators, and Jack Ma? Presumably Jack Ma would be a hero in China, right? Because of these multi-billion-dollar businesses that he's built.
Right. If you're looking into the Chinese entrepreneurial landscape, Jack Ma is the success story. He's the one really from an outside perspective and really build up this Alibaba empire and go abroad. It's the national champion narrative. But I think in the Chinese mentality, there's also this thinking about when a tree's too big, it's gonna get hit by the wind. And maybe the Chinese government begins to see a company so big and so successful and being constant spotlight by international media may have too much power. And in the end, is the national interest that take precedent. What the Chinese regulator probably don't want to see is one single financial institution wielding too much power, as a result, incur too much credit risk. After all, think for a moment, for all the credit being underwritten by Ant Group, it's all done by algorithm, and it has never been stress tested through any of the financial downturn. So that might be a prudent approach.
As a professor at a business school, where do you come down on this? Do you think that this is being handled properly? The fact that this is a financial institution and formally the argument of Chinese regulators is that it hasn't been regulated like one. Do you agree with that? You think that's right?
Here is where I constantly tell our executive to separate, one single company's fortune versus the key trend that we observe. So what we have been doing at IMD was we compile what we call the Leap Readiness Index. We want to see across the financial institution, there are many innovators, right? It's not just Ant Group is successful, but inside China, you have Ping An Insurance, which is equally successful. They provide many, many different services, mobile payment, all the way to auto home, auto financing, etc. What we're trying to learn is, regardless of Ant Group fortune, what are the inevitable what comes along? So I think executive can benchmark whether it's Visa card, MasterCard, Square, for instance, or Ant Group. What we are seeing is consumers are demanding these type of new fintech disruption. We would see those continue to unfold. But inside China, yes, maybe in the short term, the regulation may change. They may not have this super market type of financial fintech China anymore. Things may get to separate down into more specific player, much more consistent with the Western world perhaps going forward in order to reduce the credit risk. If you ask me, maybe it can be a little bit more in advance.
Howard, my final question for you is, does this have any implications for U.S. consumers or investors?
Well, I think for US investors going forward, particularly the retail investors, with the changes in the regulation, maybe if the restructuring were being pushed ahead, then the valuation probably can no longer achieve something like 300 billion US dollar. Maybe it would needed additional different IPO for separate part of its business. Think about Ping An, for instance. Recently, they just launched Lufax to get listed in New York Stock Exchange only for the wealth management operation. So that type of structure may get reflected in this case for Ant Group, that different parts of the operation may no longer be go as under one conglomerate umbrella, but instead different part of the operation would have their own individual IPO. That would be a possible route to go. But certainly the PE ratio may get dampened a little bit.
Howard, we got to leave it there. Howard Yu, he's a professor at IMD Business School in Switzerland and author of Leap, How to Thrive in a World Where Everything Can Be Copied. Thanks to Howard.